Welcome back. You're watching India Market Open. Praveen Jaipuriar, CEO of CCL Products, is with us now on the show. We're discussing their March quarter, largely in line. Revenues up 39%. High coffee prices contributing to that top line, but margins expectedly have been squeezed down 548 bips at 16.25%. This is reflected in the profits as well, down about 23.5%. Mr. Jaipuriar, very good morning. Thank you for speaking with us here at NDTV Profit. I'm interested in knowing your outlook on input prices, because this entire quarter has been about coffee prices going up. Do you see that continuing? What is the impact, since we've seen some softness now come in the recent past, and where do you see volume growth going?
The coffee prices have been very volatile for the last, 1.5 years, and particularly so in the last 4-5 months. And we have seen unprecedented prices for green coffee last quarter. We do expect the prices to soften up. There are news that the Brazil crop, which is around the corner, which is likely to be there next month. The news is that the Brazil crop has been good. And we will also wait for news from the Indonesian crop and the Ugandan crop, which are also due for arrivals in the next month or so. And that will determine the coffee prices and the levels that it will go. But my personal feeling is that it will soften and kind of regularize, because these are untenable prices, not seen for years and decades. So our expectation is that, and basis that, the good thing is that we haven't seen any contraction in the demand for coffee. So thankfully, people are still drinking coffee, and there's not any significant change that we have seen in consumption pattern. So having said so, we believe that our growth trajectory will continue, and that's been our guidance. The only difference is that, when the coffee prices are at low, our clients tend to give us far more longer term contracts. So they're pretty happy to, bet for long term. But when the coffee prices are on a boil, they're also a little tentative, and they would not like to kind of, put their bets, and they give us shorter contracts. So that's the only difference. But otherwise, our growth projections remain intact.
So just to understand, like you said, there's no real drop in demand because of high coffee prices. Are you able to pass on those prices? Because we've seen a squeeze on the margins.
No, we are able to pass on. Actually, the squeeze on margin is actually, there are two ways to look at it. What we do is we generally look at it at a top line basis, but that's not the right way for us, because since we pass on the prices, the real parameter is the volume growth. So if you see at a console level and at an annual level, our volume growth is in the range of 14%, and our EBITDA growth is in the range of 12%. That's perfectly in fine, which also indicates that we have been able to pass on prices. The only change that you see is that in these kind of situations, as it happens in any consumption good, that there will be a little bit of a down trading to basic levels. So the consumers tend to downgrade to more basic levels of coffee, and that's where you probably are not earning as much margins as you would earn in a more premium coffee or a specialty coffee. So the proportion of your basic product increases, and therefore it may put a little bit of a pressure on margin. But having said so, the only parameter we look at is that whether our per kilo EBITDA is intact or not, and that has been intact. We have been able to pass through all these price increases to our clients.
So I understand that in terms of volume growth, you're saying not too bad because you're passing on the prices, but that's shy of your guidance, isn't it? Your volume growth was not quite where your guidance was, and I'm just wondering if you want to update that among the uncertainty of coffee prices. What is your volume growth guidance looking like for FY25?
So you are absolutely right. There is a little bit of a downward distinct from our growth projection of around 18%. We came down to 14%, but that was largely because in Q2 we had a breakdown, unforeseen breakdown at our NCL plant, and that led to our volumes coming down in that quarter. We had hoped that we will make it up in the subsequent quarters, but because of these high coffee prices, we were not able to do so. So that was the only reasons. Otherwise, we were on track for the other quarters. And therefore, going forward, yes, we are maintaining that kind of guidance. The only thing is that, till last year, we had a very clear view of our 9 months to 12 months contract, and we had very good visibility. So with great confidence, we would used to say that, okay, 18% is something that we can definitely achieve, because we had that kind of a visibility. As I mentioned earlier, because of the coffee prices, there is a bit of tentativeness in the market. So therefore, we can't say with that authority that yes, I am poised for that kind of a growth. But as long as the demand for coffee is intact, we are pretty confident that we will be able to continue with that growth momentum.
You talked about how short-term contracts and long-term contracts get impacted by coffee prices. Now that you have high prices, and like you said yourself, you're expecting the new crop from Brazil, Indonesia, etc., to be at lower prices. How is it impacting your average contract tenures from clients? One assumes that they do not want to really commit too much to higher prices for a longer term. Do you see an impact on near-term volume growth thanks to this?
Absolutely. So we don't see an impact on volume growth. The only impact is that my visibility decreases.
Okay.
So till last year, I had a visibility for next 9 to 12 months because the contracts were frozen and we had signed those contracts. But in these kind of scenarios, what happens is that the client is also on a wait and watch mode. They're all, literally, working on fumes, as we call it. And they just want to be very, very, short term as of now, because if at all, because we do, cost plus pricing and we pass on everything, if the coffee prices do fall down, then they tend to lose out. And therefore, they tend to, be much shorter term. Maybe 2 to 3 months is what they would, commit, and they would wait and watch and say that, okay, let's see how the prices pan out. So that's the difference that happens in these kind of volatile market situations.
And what is your outlook for your EBITDA per kg? That has, like you explained, remained a bit stagnant because of high coffee prices. The volumes have been okay. Where do you expect that to go?
Yeah, so that's the guidance we had given, that for a couple of years, our EBITDA per kg will remain intact, and that's been the case. So today it is approximately 105, round about 105 per kilo. And that is what we expect to maintain for the next couple of years. There are some factors, because coffee prices don't affect us, we pass on literally everything to the clients. But having said so, as I was telling you, the proportion of base products could increase. But at the same time, we are also putting a lot of effort in trying to grow small packs where our margins are higher, specialty coffee, the more premium coffee. So there will be certain factors which will be, pulling up, and there's certain factors which will be pulling down. And that's the reason we had maintained that for the next couple of years, our EBITDA per kilo will remain intact. And all the EBITDA growth that will come is due to the volume growth that we are trying to drive.
Let me wrap up by giving you an opportunity, Mr. Jaipuriar, to talk to us about what's exciting. Is the big growth area going to come from your Vietnam, area, new capex? What is that one takeaway that investors can look forward to in FY25, apart from coffee prices hopefully softening?
So there are 2-3, takeaways. We had mentioned, sometime earlier that because of our capacity constraint for last few years, we have not been able to aggressively market ourselves in certain geographies where we are not very strong, especially geographies like South America, a part of North America, and Far East. And now that we have, increased our capacity, we are actually being very aggressive in these markets, and we are likely to gain a lot of shares in the B2B segment in this market. So that's something very exciting that we are looking forward to. We are also looking forward to developing a lot of specialty coffee. That's a segment which is gaining a lot of traction in the international market. A lot of consumers are now wanting to experiment with specialty coffee. They are upping their ante in experimenting coffee. So that's another area. We have done a lot of experiments. We have participated in lots of these conferences and fairs and festivals of specialty coffee across the globe. And of course, the branded segment continues to grow at a very good pace. And we are putting in a lot of effort and energy behind that. And not only in India, now that we are also looking at markets like UK, where we acquired brands. So, pretty much a lot of things that are, that we are very excited about going forward.
Okay, thank you so much for speaking with us.